And we also highlighted the fact that since our IPO back in 2017, we've now returned over $850 million of capital back to our shareholders through dividends and share repurchases, which is an astounding number, really.
Hello, you're watching Proactive. I'm joined by Diversified Energy CEO Rusty Hutson Jr. Rusty, very good to speak with you. And you're out with your half-year results as well as news that you've completed the Crescent Pass acquisition. So making good progress in building that portfolio of high-performing assets that you allude to in the results.
Yeah, that's right. And we had a great first half of the year. I gave a lot of shout outs to our employees that are working so hard in the field and helping to maintain a flat production profile now for the last 3 quarters, which is a superb achievement. And then, we obviously had a big first half of the year with the announcement closing of the Oaktree acquisition, which was a big acquisition for us for $410 million. And then the announcement and then the subsequent closing yesterday of our smaller acquisition of Crescent Pass.
So tell us more about Crescent Pass. Refresh us on what this brings to the company.
Yeah, well, I would call it a bolt-on. It's our East Texas, operating area where we have a gas exposure to the Gulf Coast LNG export facilities. It's a $106 million transaction. It hit our PV values for valuation of what we deem to be what we need to be successful. PV20 on our PDP only, paid for no upside whatsoever. 3.8 times multiple, which is under our equity trading multiple. And it brings about 38 million a day of natural gas production on that Gulf Coast, and about 26 million of next 12 months cash flows.
And take us through the integration process of Crescent into the company then.
Yeah, it'll have a lot of synergies. It obviously sits right in our existing operating area, which means that we'll be able to find efficiencies within the workforce. Probably some pipeline consolidations and compressor reductions. But just a perfect bolt-on for us and allowing us to buy an asset at a good price, and also to improve the economics of it on a going forward basis through our Smarter Asset Management program.
And so, Rusty, take us through, going back to the results themselves, take us through some of the financial highlights of the first 6 months.
Yeah, we had a highly successful first half. I mean, we measure ourselves off free cash flow. We had $121 million of free cash flow in that first 6 months, which is superb. We had $218 million of EBITDA, flat production profile, as I said, for the last 3 quarters. 50% cash margins, which we pride ourselves that have been there for the last 7 years. And we also highlighted the fact that since our IPO back in 2017, we've now returned over $850 million of capital back to our shareholders through dividends and share repurchases, which is an astounding number, really.
And of course, you've declared your latest dividend while at the same time reducing debt, haven't you?
Yeah, so we announced our 29-cent dividend, which was equivalent to the one that we announced in the first quarter. And so we consider that to be a sacred dividend now and a sustainable one for the foreseeable future.
Rusty, how about some of the other milestones you reached over the 6 months? Things like being included in the US Russell 2000 index, which must be a feather in your cap.
Yeah, I mean, we obviously listed in the US back in December of last year. It was a big thing for us as we transitioned to more and more U.S. shareholders over the long haul. That Russell 2000 inclusion obviously was a big step for us. And so, yeah, we now have access to the capital markets in the U.S. at a much higher degree than we did prior to this with just the UK listing.
What's the current 6 months looking like, Rusty?
Well, we'll continue to focus heavily on our 4 capital allocation pillars, continue to reduce leverage. Our dividends are set for the foreseeable future. We'll continue to buy back shares on an opportunistic basis, and we'll continue to grow the business. We've got some opportunities out there on the horizon that I think could materialize as we move forward.
Well, I hope you'll keep us updated on any progress, Rusty. Thank you very much for speaking with us today.
Thank you. I appreciate it.
That's Diversified Energy CEO Rusty Hutson Jr.